Welcome to the Business Podcast of the American Chamber of Commerce in Australia. AmCham Business Podcasts are hosted by Dr. Duff Watkins. Duff is a director of Exec Search International, an author, and is also on the AmCham Council of Governors. AmCham, bringing business to you.
Hello and welcome to the Business Podcast of the American Chamber of Commerce in Australia, AmCham, bringing business to you. Today we discuss the future of money, paper or plastic. My name is Duff Watkins. I'm your host on the AmCham Business Podcast, and today our guest is Eddie Grobler, the Australasian head of MasterCard. Eddie, welcome to the show.
Thank you, Duff.
Eddie, there's a rumor going around town. I want you to verify. There's this rumor that you carry absolutely no cash in your wallet because you're such a believer in plastic. Is there any truth to that?
Do you want to check my wallet?
Sure, yeah, whip it out, the wallet that is, Eddie. He's reaching into his jacket, folks. He's pulling it out, he's pulling out his wallet, and there is zero cash in there. Zero. Well, I would expect no less from the head of MasterCard.
Well, on average, I would say I carry about $30, so but today is a bit different.
$30. Okay, so that rumor is true. I can continue to spread it on the internet. Now, the second rumor I'd like you to confirm or deny. Are we headed to a cashless society?
Duff, I think we're heading towards a cashless society, but obviously I think that's going to be a 20 or 30-year journey. Mm-hmm. I think where we're heading on the short term in the next 5 to 10 years is possibly a less cash society. Mm-hmm. So, it's from a cash society to a less cash society to a cashless society. Mm-hmm. But that's a journey. And through my lens, if I look at Australia, but more so New Zealand, I think New Zealand is very advanced in terms of cash displacement. Possibly, if you compare it with some of the countries in the Nordics, I would say New Zealand is up there in terms of less cash in their system. I'm not sure, if you know, but in New Zealand you can actually buy coffee with your card, and mm-hmm. there's no surcharge, and it's frictionless, and it's easy payment to make. Mm-hmm. And what we see in Australia now is that with the introduction of contactless payments is we've started to see a drop in the average ticket value. For example, the average ticket value on a normal debit card is about $38, mm-hmm. whilst the average ticket value on a contactless, we call it PayPass, on a PayPass card is about $23.
Now, when you say PayPass, when you say contact, are we talking that tap-and-go system?
That's a tap-and-go system, mm-hmm. yes, mm-hmm. absolutely. And the uptake is incredible. For example, if you take Woolworths and Coles, this is in the public domain, mm-hmm. 7 out of 10 transactions today in Woolworths and in Coles is now a tap-and-go transaction.
Mm-hmm. So that means it's less than $100?
Less than $100. Interesting, you can actually do a tap transaction for more than $100, mm-hmm. but in that case you'll have to put your PIN in as well.
Right,
so the verification method is then to use your PIN. And I'm not sure, but in the industry's just moved over from signature to PIN at point of sale, mm-hmm, mm-hmm. and we've seen a dramatic increase of tap-and-go transactions with PIN now at point of sale based on that.
Let me ask you about your international experience, because I think I like most people, or like at least many people, I thought MasterCard is just a credit card, but what I've learned, and I think I probably learned it from you, Eddie, is it's really all about financial transactions. And I think you mentioned the other countries, I think I mentioned to you when I was in Brazil, they had what I thought was an innovation, and I believe you told me it originated in South Africa, where you can buy something for, say, $100, and they actually give you the option of paying $10 per month over the course of whatever the period of time is. And we don't have that available in Australia. I know that you used to head MasterCard in Africa, and clearly you've mm-hmm. been around. Where's it all going here in Australia? What are the trends?
Well, I think, we've, let me look at, I can obviously start on a macro level in terms of the trends. The first trend, Duff, that I see in Australia, but also globally, is a shift away from paper. Mm-hmm. So I think this is where we started our discussion. It's a shift away from cash. Mm-hmm. Globally, it's interesting. Globally, 85% of all transactions are still being done in cash. Okay, so that's mm-hmm. still... In Australia, it's about 63% of all retail payments mm-hmm. are still cash payments. So that's the first shift away from paper or cash. The second shift away from paper that we see is, and this is possibly on a micro level, but it's a shift away from traveler's checks with the prepaid cards, which is incredibly popular now with people that travel. They actually want to ring fence their funds and use it as on a separate account. They can actually use it in different currencies as well. That played a very, very, I think a large part to displace travelers' checks in the system. And then the third part is obviously checks is just going down. If you look at the latest statistics from the RBA, it's absolutely, I think, on a downward trend as well. So that's the first macro trend is the shift from paper to electronic payments.
So this is all part of the frictionless consumption that I've heard about, making it easier and easier for me, anybody, to purchase things. They're involving fewer people. It's more seamless transactions.
Yes. I would say, and if I can just reflect back on our MasterCard's kind of vision and our mission. Our vision is a world beyond cash. So this is where you started the discussion with me, and it's interesting that you started that kind of approach on it. The second one, which is kind of interesting, is our mission. Our mission is to use our technology to make payments simpler, safer, and smarter. So the one that you've touched now in terms of a frictionless kind of experience is to make it simpler and to displace cash. As soon as a payment is more complex than cash, then it will obviously be difficult to displace cash in the system. So that's the first one. But what's important for us as well is to make it smarter and to make it safer.
Okay, well, let's just talk about safer. I mean, I've had fraud on my credit card. My wife's had fraud on her credit card. My neighbors had fraud. This is quite a common problem around the world. What is MasterCard, for example, doing to make it safer for people?
I think they're kind of short-term, medium-term, and longer-term kind of activities around this. But if I can break it into two, if you think about payments conceptually, the one component of payments is what we call card presence transactions. So that's where I can see you, I can verify you that you're Duff, and you can actually put your PIN in or you can sign. So that is an easy way to do it and to verify the authentication of that transaction. The second one is in the online space, or what we refer to as the card not present space. So I can't see you, so I need to take some kind of a verification method to take it that it's Duff that's actually doing the transaction. Now, what we see globally is with the introduction of smart card technology and the PIN that actually replaced signature, is that fraud in the card present environment started to go down. Okay? But it's like a balloon. If you press the balloon, it pops out on
somewhere else.
So we've started to see fraud in the online space started to increase. Okay, so that's one area where we focus on quite a lot. And our challenge here is to develop a scenario where a card present transaction and a card not present transaction looks exactly the same. So the authentication is exactly the same. And our step towards that is tokenization.
So what's that?
So what tokenization is that if you do a transaction online, is not to process your information or your card information online, is to decrypt it and to encrypt it into some kind of a token that will be sent through to the merchant. So in other words, the merchant will not see your card details, and it will be perfectly safe.
So it's another layer of security.
It's another layer of security.
Masking my actual details.
And that is the next priority for us, is really to address that space. So the concept of tokenization is something that I suppose in the industry will start to talk more about. It's interesting, the Apple Pay announcement is based on tokenization as well on the back end. So Apple worked with Visa, MasterCard, and Amex to develop that tokenization. But it's not only for Apple. It's going to be for all online payments that we're going to use.
That is so new, this Apple payment. Just explain that to our listeners. No, actually explain it to me. The listeners may know. Just tell me again what this Apple payment is.
So it's interesting, so Apple's been a bit remote from NFC payments, so that's tap and go or contactless payments and near field communication payments. And with the Apple Pay scenario, they've developed the ability now to do contactless or pay pass transactions. The security element will be embedded on the phone.
So a contactless transaction is what exactly? Do you wave your phone at it?
That's a tap and go transaction.
That's a tap and go.
That's a tap and go. So if I take, for example, the short-term kind of process that we have in Australia is where the banks issued stickers on the back end that you actually stick on the back end of your mobile phone. This displays your card. So at point of sale, you just actually tap and go your mobile phone with the sticker on the back end, and it actually displaces the card.
And so you're showing me your phone. It literally has a MasterCard sticker atop the phone, like a small, very version of the credit card, and you can use that for these various transactions, all on your phone. Okay.
Yeah. Okay. So the next step for this is, this is the first step in the journey to actually the convergence between mobile phones and point-of-sale payments. So Samsung actually embedded the sticker capability on their phone. So both Westpac and Commonwealth Bank already launched Samsung phones with that embedded in the phone. So it's not a separate sticker.
Right.
So what Apple did now is exactly the same. So with Apple Pay, is that payment is embedded in the phone. So with the Apple 6, you'll be able to do a tap and go transaction at point of sale when it's enabled to phone, obviously. You'll always also be with Apple Pay be able to do in-app applications. So that's through iTunes. You'll be able to actually do purchases on through iTunes as well with the phone. So the phone will have that secure element and the financial functionality on it. So that's in short where Apple Pay is going. But it's similar to what Samsung did with the embedded secure element on their phone. It's the very kind of first step in the journey is what I've just showed to you, is the sticker on the back end of the phone where I can tap and go at point of sale.
Okay, let's investigate the dark side of all this now, Eddie. Now, I know you're an educated person. I know you have a master's in psychology before you got into the transaction business. There are some who say that this frictionless consumption, this decoupling is the official word, which takes away, which removes the person from the physical transaction, actually has a couple of negative implications. One, it can lead a person faster and faster into financial insolvency, and also it can decrease their happiness because it takes them away from the actual emotional pleasure of purchasing. Do you have any views on that?
I would argue, if you think about the first component of that is, in terms of the payments experience, I'm not sure about you, but for me to take cash out of my wallet is possibly not the best experience that I have. I don't wake up in the morning and say, yes, I'm going to pay for something. I think what payments in future will be like is to see and then to really have a closer look at the payments value chain, is to understand what Duff is interested in, what he purchases, and how we can bring value to that experience. So in other words is, say for example, if you buy pizzas on a Friday evening for your family, is that we can possibly, if you subscribe to the process, know that every Friday you buy pizzas. On a Thursday morning, we can send you a message and say, there's a special with Domino's on Friday evening, are you interested? And we can arrange for you that it's delivered at your home. It can all be generated. So that's before you do the actually purchase. And then the other component that's important is what happens after the purchase. That's the rewards. And to recognize your kind of behavior through that. But I think just to take a step back, in terms of our research, there are 4 definite areas in the minds of consumers that's important in terms of the payments experience. The first one is convenience. Now, your argument is that to make that frictionless, obviously there's a risk in it, in terms of there's a credit risk in it, and there's a risk that you can actually get detached from it. But I think our experience with contactless and PayPass in Australia is that consumers really like it. It displaces cash. It's easy, and remember, this is the smaller ticket values. It's not high ticket values. So the first one is convenience, and that's very important. The second one is information. If we can, and in terms of the role that we as MasterCard play in with your bank and the merchant, if we can provide you with more information so that you can make a better informed decision when you do purchase something, that is really, I think, a value-added proposition. So that's the second component, is information. The third component in the mind of consumers that's important is recognition. And that's the reward kind of structure that, is to say, okay, you do kind of purchases at a certain, you're loyal to the bank, how can we recognize you for your loyalty? And the fourth one that we've already touched on is security or trust. That is something in the financial system that we just can't compromise. So that is incredibly high on our agenda. So back to the question in terms of what is the risk to make payments as convenient as we're trying to do it in terms of displacing cash. I would say it's very low. I think it's obviously displacing lower ticket values in terms of cash. In terms of the purchasing experiences, the end game for us is to make it simpler and smarter and to bring more value to you in terms of your experience.
When you talk about the recognition, exactly how does that work? I mean, the impression I get is that the bank or the merchant recognizes me as a loyal customer and therefore recognizes me how? What's in it for me, Eddie? The old business question.
Yeah. We see a direct correlation in terms of loyalty programs, where in terms of the kind of the stickiness in the relationship. So you must remember, through the lens of a merchant and through the lens of a bank, is the relationship with the customer is incredibly important. But the customer is also looking at the richer kind of relationship, and that's the recognition part. So it can be in the form of making your life easier, in terms of, we can offer you discounts if you do transactions at a certain with a certain merchant. It can enrich it in terms of rewards, and over time, if you can actually build up your reward system. But also, I think, in terms of to be proactive in terms of your behavior. So if you start to look at, say, sports apparel, and to come up with a kind of say, we see that you're actually looking for sport apparel, we can recommend the following to you. The counter argument on that one is this kind of a big brother kind of system where, in terms of the whole debate around
the
privacy.
Yes.
And I think from that point of view, it is obviously important that the customer actually opts in that. So that structure is, I think, very important. That's more in the domain of the banks and the relationship with the banks. But what we have is a payment scheme where we facilitate the payments. We've got the data that we scrub the data, we take the personal details out of it, and we actually provide kind of the trends to the banks that they can actually use in terms of their development of their relationship with the banks.
The one thing that has come across loud and clear in our conversations over the years is, I used to think, MasterCard is just a credit card, just another credit card. But in fact, the whole industry is driven by innovation. You're trying to new ways, new things. You're trying to top what's been done in the past. What's the next big thing coming our way?
Well, I think if you just look at the context at this stage, so currently as we have it globally, there's about 12 billion devices that's linked into the internet. It can be PCs, it can be tablets, it can be smartphones.
12 billion.
12 billion. And the next wave now is what they refer to as wearables. So the view is that in 2020 there will be close to about 50 billion devices linked into the internet. So back to your question, so what is next? Where is this going? I think security is obviously extremely important. We've touched on that in terms of the tokenization and really to make sure that the payment system is much more secure. And the reason for that is the payment system is open. There are more participants in the payment system. So it's important to make sure that it's secure. So the solution for that is tokenization. And then the next wave from innovation that I think where it's going is what I refer to as the Internet of Things. So let me give you an example. We're currently working with Whirlpool. They've got a problem with laundromats. And
Whirlpool is the large white goods manufacturer from the U.S.
That's right. So I'm not sure when last you've been in a laundromat, but it's not a good experience. The payments experience is not good. You need to queue up on that, and wait for one that's available. So what we did through our MasterCard labs, that's our innovation hub, we've developed an application that will now sit on the Whirlpool laundromat machine. It's where you can actually send an SMS and say, I want to book this machine for 10 a.m. this morning. And if you arrive there, it's available. You load it, you start your washing, you can leave, you do your shopping, you get an SMS when it's finished, and you can do your payment online. So it's cashless, it's friction-free. So that is one example of the Internet of Things. So it will sit on a Whirlpool device, and you'll be able to do your payment on that. It's similar to what the car manufacturers are doing with motor cars, so that as soon as you reach kind of a time where you need to take it for a service, a signal will go, and it will actually also arrange for you in terms of your appointment. So a scenario that we may see is in future is that there's an application on your fridge, and if certain stock in your fridge is low, it will give you kind of a signal, and you can decide whether you want to order it online from your retailer to be delivered at home. That is the Internet of Things. My view is that that's the next wave of innovation, and that we'll see, I think, some development in that space.
You mentioned something that I think is interesting and important. Well, I did my taxes, as I do every quarter, as one has to in Australia. And I haven't written a check probably, I don't know, in a year or two. And it's so the ease of transactions is having quite an effect upon the banking system, which leads me to ask you exactly what is the relationship between a company like MasterCard and the banks? How has it changing?
Well, I think the payments landscape is changing. So traditionally, we let me take a step back. MasterCard started, and same with Visa as well, started as an association of banks.
In the 1940s it started in the U.S. Been around a long time.
It's a long time. It's about 60 years ago. In 2006, we listed on a New York Stock Exchange. So we're now kind of an independent company. We're not owned by the bank. So that in a way redefined our relationship with banks. But we still operate in what we refer to as a four-party system. Now, the four-party system is obviously the merchant on the one hand, the consumer, what we refer to as the issuing bank, and the acquiring bank. So that's the four parties, and we facilitate the transaction in the middle. So we create, we clear and settle and authorize the transactions. So in that model, I would say we are very close to the banks. We've got relationships with about 24,000 banks globally. That's part of our franchise. But what's interesting is that we see that the payment system is actually changing. We see that they kind of new entrants into the payment system. Now, I, on a high level, categorize the participants in the payment system in three categories. The first category is what I refer to as the front-enders. Now, that's typically like, for example, Uber. They've developed a application.
Uber is the lay taxi service.
Exactly. I think you and I have discussed this. It's a great experience. You can order the taxi. You can see where the taxi is on its way. You can see how long it will take for the taxi to arrive. You've got the driver's detail. He's got your details. And the payment is frictionless. There's no paper in the system. They will typically email or SMS you your receipt. So that's the example of a front-ender. And Uber as a company is about 5 years old. But today I think they operate in something like 10 or 15 countries. The second category is what I refer to as the circumventors. So that is the PayPals and the Squares that play a role in the value chain, but they're relatively new in the value chain as well. Just in terms of the front enders for me is so that's Uber, it's Apple, it's Google that play in that system. And then we've got what I refer to as the traditionals. That's MasterCard, Visa, and Amex. Now, the bottom line is that in an open payment system, the relationship is not only between, for example, MasterCard and banks anymore. The relationship is much more inclusive. So it's a relationship between the bank, Facebook, Google, Apple, and MasterCard. So it's interesting how that model actually evolved. Give you an example, Commonwealth Bank in Australia, they offer a Facebook account to their customers. So obviously that payment system is actually starting to be redefined in a way. Our view on this is that we're the facilitator of the transaction on the back end. We use our technology to clear and settle and authorize transactions. So there's a huge opportunity for us to collaborate with the front enders and the circumventors and the banks. The system is more open. I think that's the core message.
What I want you to, I know that you've been around the world, you know a bit about the transaction, the payment system around the world, how it operates in different countries, different cultures. I'd like you to gaze into the future. What are the implications of these innovations, these trends, these changes for our economy or even our society?
Duff, there's a very strong argument and research as well is that the displacement of cash is to the benefit of society. Not only of the benefit of, if you look at all the stakeholders, displacement of cash is to the benefit of governments. It makes the tax system much more efficient, it makes it more frictionless, it makes it more transparent. I think a good example is Korea, where they've implemented a structure where there's a benefit on electronic payments. So the reason for that, and they've introduced it with the Olympic Games, is to have more transparency in terms of what's happening in the payment system. So there's a real benefit in terms of governments to move more to electronic payments. We've discussed the benefit to consumers. I think there's in terms of the convenience, in terms of the safety, the security, and the recognition, it's embedded in electronic payments. It's also for merchants, the benefit there is that they've got less cash to handle. And it's a fact that in a system where you handle cash physically, there's leakage of cash as well. So there's a real benefit on that. Our research actually indicates that the cost of cash is about 2.2%. It's anything between 1.8% and 2.2%.
Okay, now explain that to us. What is the cost of cash exactly?
The cost of cash is the total value chain from where it's originated by the central bank, it's distributed into the system, and it's managed in the full cycle back into the central bank. So that whole ecosystem through the whole life cycle of cash. So that entails, the handling of cash, the shrinkage of cash,
Shrinkage being the cool word for theft.
Yeah, I would say that's a cool word that we, or the softer
retailers
word.
love that word, but it's theft. Yeah,
it's theft. So that's the full. And then if you look in Australia, for example, the cost of a credit card transaction, on average, for a merchant is 78 basis points. Whilst the cost of cash is anything between 1.9% and 2.2% of the transaction. So the argument there is the benefit for merchants is it's much more effective, it's less costly, and the other thing that's important for merchants as well, it provides them with data. We've covered that. Yeah. So that's the merchant community. If you think about banks as well, it's less cash to handle in the system. They've got data out of the system. They can offer more services to their customers. And we've got very strong evidence that with debit cards, is that the balance that consumers actually maintain with debit cards is higher when they use debit cards more than cash. So typically, if you withdraw...
So give that to me again.
Let me play it back to you as an example. So what will typically happen with a person that's cash intensive is he will go to the ATM, say, once or twice a week and withdraw, say, $400. and on balance he will have about $100 or $150 in his wallet.
Mm-hmm.
In the case of a debit card, where you actually don't have a lot of cash in your wallet like I do,
Mm-hmm.
your balance in the bank is higher.
Mm-hmm.
So in other words, there's a benefit to the bank, but there's also a benefit to the consumer where you earn more interest on it. You maintain a higher balance on that side. It's not as if you actually pull more incremental.
Because I'm using a debit card only for the amount that I'm debiting.
Only for the amount
Right.
that you debited. So whilst with ATMs, it's bigger chunks that
Yeah,
actually
yeah,
goes
yeah,
out
yeah.
and is
Mhm.
unproductive for
Mhm.
you as a consumer as well as for the banks as well.
Mm.
So from that point of view, it's to the benefit of the banks as well. If you look at society in general as well, there's a very strong evidence that in more developed societies, cash pay or electronic payments are more advanced, and in societies where corruption is relatively
Mhm.
low,
Mhm.
there's also a strong correlation with electronic transactions as well.
Mm-hmm.
So I think if you look at all the stakeholders in the payment system, there's true value in terms of electronic payments rather than cash.
You're reminding me of something that I learned from my mother. My late mother was a Bank of America senior executive, and she told me when I was a kid growing up in North Carolina, and she was a branch manager, she said, they'd be out of balance at the end of the days,
Yeah,
and this
yeah.
happens routinely in branches. She says, there's just something that happens to people when they're handling money. They get anxious, they get nervous, they get scared.
Mm-hmm.
Basically, their IQ drops is what it sounded like to me, So, and it's what you're alluding to. There's just something that happens, and it's not all good. A lot of bad things can happen when people are dealing with cash.
Yeah, yeah.
And so this frictionless consumption that we're talking about reduces that, or even eliminates that anxiety, that danger, that it minimizes the risk of that happening.
That's definitely the case through my lens. I think you've briefly touched on it. I've seen it in developing countries in Africa where I worked quite extensively, and where we worked with governments that were really very keen to actually move away from cash for the reasons that we've just touched on. And we start to see interesting kind of trends in developing countries where there's a movement away from cash. I think a good example is M-Pesa in Africa, where it's a mobile payment.
Mm-hmm.
I think the benefit in developing countries is that they possibly don't have the legacy systems that big banks have.
Mm-hmm.
They have other challenges as well, is to develop the infrastructure and so on. But I see a very strong development in Africa for electronic payments. For example, in Nigeria, we actually worked with the Nigerian government to issue identification cards with a payment facility on it.
Mm-hmm.
And that's really to bring it together and to displace cash in the system at the end of the day.
Mm-hmm. And by displacing cash, reduces the chance of corruption by increasing transparency.
Exactly.
Is that our bottom line for
that? That is the bottom line.
Mm-hmm.
That's exactly the bottom line.
We'll finish here today. Today we've been talking about the future of money. Our guest has been Eddie Grobler, the Australasian head of MasterCard. My name's Duff Watkins. I've been your host on the AmCham Business Podcast, AmCham, bringing business to you.
You've been listening to the Business Podcast of the American Chamber of Commerce in Australia. This podcast is supported by Lenovo and VML. Lenovo is one of the world's leading personal technology companies producing innovative PCs and mobile internet devices. Lenovo, for those who do. VML is a full-service digital marketing agency that can take you where you want to go. Everything we are is in everything we do.